Hi, I am Anna. I come from www.ntvforex.com. Europe to open higher, despite weak German data and sliding oil analysis. http ntvforex.com News ID 5408F697 2026 52:50 am. European bourses are starting the week on the front foot following a steep sell-off across the previous week, despite mixed Chinese trade data, rising US-Chinese tech tensions, slowing German industrial production and slumping oil prices. NBSP Chinese exports jumped 9.5% in August. YoY, the fastest pace of growth in a year and a half, indicating that foreign demand is picking up firmly as countries reopen post-lockdown. Export growth is also being attributed to a steep rise in PPE exports and work-from-home items such as computers. NBSP imports, however, are painting a more concerning picture. Import numbers were disappointing, falling 2% from a year earlier, suggesting that domestic demand in the world's second-largest economy is still soft. NBSP German industrial production slows drastically. NBSP concerns over the health of the economic recovery in the Eurozone and particularly Germany have started to increase. The latest German industrial production figures fueled those concerns further. Output increased just 1.2% MOM in July. This was well short of the 4.7% forecast and down significantly from June's 9.3%. The data comes after German factory orders pointed to the recovery losing momentum. The DAX is shrugging off the data whilst Eurist trades mildly lower. NBSP Boris plays hardball with Brexit. NBSP The pound is losing ground across the board as Brexit concerns return with vigour amid a ramping up of pressure by Boris Johnson. Ahead of the 8th round of trade talks, the British government dropped a series of political bombshells across the channel, potentially threatening the chances of a trade deal ever happening. Government plans to introduce domestic legislation which partially overrides the Brexit divorce deal could throw a serious spanner in the works. The threat of such legislation is being used as leverage to get a free trade deal done by October 15, a new date set by Boris Johnson. NBSP failure to agree a deal will see the UK end the transition period on unfavourable WTO terms, putting trade worth $1 trillion between the two sides into uncertainty. NBSP oil skids on demand concerns. NBSP oil has plunged at the start of the new week, trading 1.8% lower whilst slipping through the key $40 per barrel level to trade at 39.50. WTI had skidded to a 2-month low of 38.55. Oil prices dived as Saudi Arabia made the deepest price cuts for supply to Asia in 5 months and as concerns rose over the recovery in demand. NBSP supply is abundant, the US driving season is coming to an end, jet fuel demand in on the floor and China is slowing purchases. With COVID cases still rising globally and fears of a second wave as we head towards winter, there seems little reason to be bullish on oil demand. NBSP China, which had been underpinning prices with recorded purchases of oil, slowed these purchases in August, adding to the pain for oil prices. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me mt5.expert.advisors.